Welcome to Zen and the Art of Real Estate Investing. What if you could learn from experienced real estate investors, find out what got them to where they are now, get insight into their daily habits, and take these insights to inspire your own growth? Each week, Jonathan Green shares an in-depth look at the mindful approach to real estate investing. Jonathan is a real estate investor, advisor, and coach, as well as the founder of Streamlined Properties and the team leader of Streamlined Properties on Market, brokered by eXp Realty. Whether you are looking to start from scratch, get to the next level, or just a straightforward and honest approach to real estate investing, Jonathan seeks to provide a free mentorship program you can take with you anywhere. Now, here's Jonathan.
Welcome back to another week of Zen and the Art of Real Estate Investing. Got another great show for you. Before that, I just want to remind you, we are releasing episodes on Mondays and Thursdays now. We're 2 times a week. We appreciate you. This week, we have Alex Burnham, only 3 years in the game, and she's already making a lot happen. We're going to talk about how to get started as a real estate investor. You're going to get so many tips for the things you can do right in your first 3 years and on. Let's go. This is episode 61 of Zen and the Art of Real Estate Investing with my guest, Alex Burnham. She has only been investing for 3 years, but it's been an interesting 3 years. She's also a general dentist, so we're going to go over a lot of things about holding a job and investing. She's focused on short-term and midterm right now. Alex, welcome to the show.
Thank you so much for having me, Jonathan. It's a pleasure to be here, and I'm really excited.
Yeah, I'm excited to hear about your journey. I like to always start here. Before you got into it and when you were younger, even getting into the higher teens, were you even interested in real estate?
Not even on my radar.
Huh.
I will tell you that. Nothing that I thought about was real estate at all.
Yeah, the reason I ask, and honestly, I think we're probably at 60 to 70% of people answer like that. I think it makes it accessible to listeners to know they don't have to have a lifetime interest. You know, I've been involved in it my whole life, but you don't have to spend your whole childhood just pining away for investing. So how did you end up coming to real estate as an investment portal?
Well, I was actually just researching. After I started my career, I wanted to kind of invest in anything, honestly. And I kind of researched a little bit. I looked at stocks, I looked at real estate, I looked at just other avenues, and I didn't really understand the other avenues as well as real estate. It just seemed so much very simple and also tangible because you can see an asset is right in front of you and you see the value add if you do rehab or anything to that. It was just, again, something that I related to and I guess really enjoyed learning about.
Was it the tangibility factor, I think, is so important? Was it a little bit less risky knowing that you could go touch it? You know, like with stocks, I've been investing in stocks my whole life too, but that's just it's like money. It's just in the air. I don't know if it exists. Was it something that was more comforting for you to know, well, if I'm going to get into this new arena, I can go touch it, fix it, it can increase in value and I can actually see it?
Yeah, exactly. And truthfully, you invest money in stocks or even crypto or something, but you just look at your phone and just see it go up or down, right? You don't really have something right in front of you that you can say, oh, that's mine, and look at how much I added to this, and all that. So
that's a good point. Yeah. There's no value add in crypto. You can't be I guess if you're mining, but that doesn't really do anything. But yeah, that's a good point. You can directly impact the increase in your investment by being hands-on, understanding the market. So once you got interested and saw real estate's something, where were the first resources that you found that started to help you figure out how am I going to do this?
So like you said, 3 years ago, which was prime 2020, I'm sure a lot of investors now, a lot of them started in 2020. And as a dentist, I actually didn't work for 3 months. And that really gave me the motivation to figure out what can I do with this time instead of just kind of sit around, watch TV, do something like that. So I actually heavily dived into books and podcasts and even webinars. Everyone was doing a webinar or something.
There was the most webinars that have ever occurred were during the pandemic.
Exactly. There's people that I've never met in person, but we just like this, but we continually had meetings and stuff. And but it was all through Zoom. And honestly, I've been in school my whole life, until
Yeah.
I started my career. It felt like I was in school again for 3 months because I kind of made a schedule for myself, this time, like listen to these podcasts, this time kind of read a chapter or two from this book and then analyze a deal. So I heavily dived into books and podcasts for the most part.
Did you find, like a lot of us have, that the community of real estate investors just across the country and world is so much more accessible than people think? Like, people really, there's
Yes.
definitely a lot of like weird
Yeah.
guru stuff going on, but I think as you go into webinars and stuff, you can tell, like, if there's no sale at the end, like somebody's just trying to help. Have you found that along your first 3 years?
Yeah, I've actually experienced both. So I've experienced people trying to
Yeah.
I went to this in-person meetup, and it was one of the biggest, I'm not even like one of the biggest people in real estate.
Yeah.
So I was like super excited. I was pumped. And I just remember at the end of every 20 minutes, they would say, and if you don't sign up today, you're not going to get this. And the people beside me, I thought it was going to be something very collaborative, and I was very new in real estate at this point. And the person beside me was like, "Oh, how many deals have you done?" And I'm like, "Oh, I'm actually just starting. I'm really interested in it." Literally turned around and tried to find the next person. Didn't even exit the conversation in a polite way. So I've experienced that portion of it. And then I've experienced the other one where everyone is not everyone, but majority of the really passionate people of real estate and want to help others and are super genuine, are so kind, and they will almost go out of your way to help you and make sure that you're successful in what you do and investing.
Yeah,
so
I agree. I mean, even though I had been in it my whole life, until I really found Bigger Pockets, I didn't have a big thing of investors. I was just doing it like my dad taught me. I did it with my friends or partners, and then I was like, wait, there's all these people who just want to talk about investing. It's really amazing. But I do think it's important to look at the dichotomy of it, that there is a guru set that are going to try to hard sell. And not to say there's plenty of courses that are helpful, but it's kind of, I think, for what you were saying, you're new, you don't really want to get pitched every 5 minutes. You're trying to let's get the learning portion on. So what was it that made you take your first step and get your first property?
Well, I was analyzing deals every single day, as the Bigger Pockets OGs say, analyze, analyze, analyze. So I was doing that in a market that my husband's from this area. And so I was like, well, let me just keep trying in this area and keep doing deal analysis. We found a deal and the numbers worked. I did it literally 100 times, over and over again. I'm like, oh my God, this
Wait, so
works.
Just for the listeners, you're talking about Arizona because you're in Arizona right now, right?
I'm talking about Kansas City.
Oh,
actually.
Okay. All right. Okay.
Yeah.
Now
sorry,
we're all over the map.
Different.
Okay. So your husband's from Kansas City. But that's a really smart thing. A lot of times new investors, especially in the forums, they always ask how do I pick a first market? And something that I always said is something that you did. It's make a list of all the places that you lived and then make a list where your best family and friends have lived. So at least you have a slight competitive advantage. You're not going in blind to a market. Did that help you that your husband could say well, I know that area? At least you're ahead.
Yeah, definitely. So we lived in Chicago at the time. Like I said, we're all over the place.
Yeah.
So we lived in Chicago for 5 years, and then I'm from Arizona. So the price points in those areas for my first deal, I just wasn't comfortable with because I wanted to make sure I really understood it before I jumped into something higher priced. So my husband's from Kansas City, which is just easier to get into than the other two. So that's why I chose that. And it was easier because he's from there. So I looked specifically in those neighborhoods that he lived in, and also somewhere that is very close to the hospitals and downtown and things like that.
What was your original plan? Were you already thinking midterm rentals because you talked about hospitals, or were you just thinking long-term to start?
Truthfully, I was thinking long-term. I was thinking medical school students who are in school for 4 years, nursing students, dental students, because all those schools are right across the street from this neighborhood. So that's what I was mostly thinking. Yeah,
that's a great thought. I mean, I think a lot of people think of university investors as college kids, doing keg stands all the time, but they forget about graduate schools, doctorate degrees. Those are the best tenants. What's better than medical school tenants. They're never home. They're
Yeah.
always tired. They're never going to party. Like, you can't get a better tenant, which is also why midterm rentals for travels nurses have done so well. They're so busy.
Mm-hmm.
There's no party atmosphere. You're saving the wear and tear on the property.
A little addition to that too. So when I started dental school, I moved in with my parents to save money, and they actually moved into a new house. Their old house where I grew up in is across the street from my dental school.
Oh,
And so my parents told me to rent it out to my friends. And at first I wanted to live in it with my friends.
Yeah.
And my parents were like, no, because we can be making money off of it type thing,
Losing
And
one bed there. Yeah.
And they were like, you could just live down, because it's 5 minutes from where they live now. And so since then, every year they don't have, every student who's graduating rents to the student, in a different year and stuff like that. So it's very low vacancy.
Yeah, that's another benefit of the college rental. Most of my clients and friends who do college rentals, they don't really end up ever having to advertise them, because the upperclassmen, as they graduate, just recommend the next people to come in, and they're the same type of people. So you keep getting the same good students who are just going to keep the place clean.
Yeah.
And nice. Oh, so that was were your parents thinking of investing at the time, or it was just something where you're moving to a new house? Hey, like, let's not sell it. Let's keep it.
My parents, my mom really heavily believes in real estate. They've actually owned multiple properties. Basically what they do is they move into a property, own it for 2 years, a lot of value add in the 2 years, and then move. So we've kind of moved a little bit.
Yeah.
They've also owned an assisted living and owned the property of it as well.
Oh, interesting.
So it just didn't, I never thought that I would be interested in that. It was something they did, not something that I might be interested in at the time.
Yeah. Interesting.
Even through dental school, like when my friends moved in there and my parents, were getting the rent money and stuff, I really didn't even think about it still.
But but now though, 3 years in, do you think like, wow, actually I was learning stuff when I didn't mean to, because they were doing it?
Yeah. Yeah. And of course, everything's 2020 hindsight, right? Like you learn a lot from things like that. But yeah, I realized that I picked up a lot of things from them, just not until later in life.
Yeah. So what was the first property? Is a single family?
It was a single family home, literally across the street from the medical school, the hospital. And caveat is I found it on Craigslist, which is not an avenue that people normally take nowadays. And so I was listening to the OG Bigger Pockets, and whoever the guest was, I can't remember. They just said, don't forget about Craigslist. And it never occurred to me to even look. And the first time that I jumped on and looked, I found a property in the exact location that I was looking. And it was, for sale by owner, everything just was like laid out there for me, like kind of like, oh my gosh, like this is it type thing, the golden ticket, right, to get started. So I did all the analysis. I, called up an agent to go look at it, because I was like, oh, this actually might work. And everything worked out, everything like on the paper worked out. When we looked at it, we were like, okay, like, we see it through the video and it looks like we can add value to it. Mm-hmm. And, it's across the street from the medical school. And I really just told myself, if you don't do this and don't take this step, you're never going to actually do it, because this is the perfect price point for you guys. This is the perfect area for you guys. Everything seems like you should do it. And if you don't, when are you going to actually like take action?
Yeah.
So,
I mean, I think you definitely hedged your bets. You smartly picked market where you knew that first price point. If something went wrong, it wasn't going to kill you, because you didn't go in super high, but you also leveraged your husband's knowledge of the area, and that you guys were, in close-ish proximity to it where you could be there. So did you ever see it before you bought it in person?
We saw it the day we closed, actually. So yeah, that was another fear of mine. So another, I guess, information is we've never bought a primary residence because we've been moving around so much. Yeah. So just to buy a property that in general was very scary for us. And then especially because I've never seen it in person, my parents and his parents were like, what are you doing? You've never seen it in person, that type of thing. So, but I had to go with my guts, because I was like, people do this all the time. Like, I want to take this risk. I was very excited.
It seems like, though, you had done enough research at the time to get yourself to a point where you felt comfortable, whereas a lot of new investors will kind of just stop. They'll keep analyzing and
Mhm.
analyzing and stay in analysis paralysis, but it's because they didn't do enough ancillary research to get the confidence level high enough. It seems like
Mhm.
because you started with books, podcasts, learning, and then you're doing analysis, you just somehow pushed yourself to a point where you were okay with it. And did it help that your husband was like on board? Because so many couples, one's like, I don't really, why are you even doing this? But you were both in this, making this decision together.
We were. So my husband, he was in residency at the time, so super busy. Based, some weeks like we didn't see each other because he was working
Yeah.
24 hours type thing. And when I told him like I found something, I basically said I'm going to bet on myself and I trust myself. I want to take this
Yeah.
risk. He said, he 100% supports me because he saw like how much I was actually like putting into it. But he said he just couldn't give up the time to help me in this avenue
Yeah.
because he's so busy. But he said he does support me. He just wants to make sure that I can do it by myself in terms of if things go wrong, like I would have to handle the tenants if I was managing it type thing. So, but he was super on board.
Yeah, but that's an
Mhm.
important discussion to have. We've talked a lot with couples who invest or one party who is kind of doing more of the work, but that's a smart conversation to have, to just say like, okay, you're good, but like I don't have the bandwidth to help you with this. Is he more involved now, or are you still kind of doing the majority of the stuff?
It's really funny because he says like, he doesn't have time to help with like the rehabs and managing the contractors and stuff. Yeah, he was the one that found all the other properties we bought. I don't know how,
Yeah.
but he likes to look at them and send me deals, but in terms of like managing things, he doesn't like to do that part. So yes,
Yeah.
he enjoys it.
Yeah. Okay, so you start in Kansas City with one, and then what led to getting to the next one? I think that, one is always not, I wouldn't say easy, but like you've taken the big step, you got started, but then where did you go from there?
The second one is actually interesting because the second one, I was learning a lot about hard money, and we found a property on the same, it was like 2 blocks down from this one. And I researched a lot about hard money companies and lenders and found one that we really connected with. So I did a hard money on that one. And the week that we were closing on that one, the owners of our first property reached out to us and said, we really liked you guys. We have a property down the street. Would you guys like to buy it
That's awesome.
before we put it on the market?
Yeah.
And I was like, oh no, I vividly remember it. We were on vacation with our friends and I was like, oh my gosh, we have this opportunity. I don't want to give it up. So these houses are literally on each street. Like you could throw rocks at them. Like they're
Yeah.
all on the same
Yeah.
street. It's just one's on a different avenue. And I just told the sellers, listen, like, unless you can do seller financing to us, we can't because we're in this situation, but we really, really want it. And we appreciate you, like, and thinking of us. And so they agreed. And they were like, what terms do you want? And so
Better
we,
research.
yeah. And I was like, oh my gosh, I've never done creative financing. I've never done a hard money. I've never done seller financing. And I was like, well, these people do it. So I would listen to some podcasts. I would just search, seller
Yeah.
financing or something and listen to it. And at the time our money was invested in this hard money. We still had to put some money down and we didn't have the bandwidth like to do both
Yeah.
financially. And so we just told them like, listen, if you can do this for us with very little down, we said 3% down, 0% interest, at least for,
Yeah.
2 years or something, like a year or 2 years until we get this one done. And they agreed to it. It was super easy actually. So we closed on the 2 properties in 1 week.
But I mean, you must have built a relationship on that first sale, even though you were kind of absentee for it, that they knew like you're someone to go to. I think that's what you want to develop long term. There's investors who've been in it 20 years who don't get those opportunities. So what do you think it was about the way you handled your first transaction that made them reach out to you guys again?
Honestly, I don't know. So we used an agent for the first one, and we actually we become friends with him. Super nice guy, and I really think that he actually helped us in terms of the relationship.
Yeah.
He kind of told, because when you work with an agent, you can't really talk to the sellers directly. So he technically,
Yeah.
so
Until you show up at walkthrough and everybody's there, and you're like, oh, this is fine.
yeah, exactly. Yeah. I think it was just because it was super seamless. They knew my husband was from the area. They knew that he went to school across the street.
Yeah.
there was like, some commonalities there. And I think that really helped. So it went pretty well.
Yeah. And
Yeah,
so do you still own those 3 properties?
we do.
Yeah.
hmm
So in are they all long-term rented, or have some of them adjusted to something else?
2 of them, the ones from the first owner, are 2 long-term rentals. The other one is like a mid-term, short-term hybrid.
Yeah. Well, so clustering is a really interesting thing for real estate investors, and you kind of like fell into clustering with 3 properties so
hmm
close together. Have you looked at the potential of you can upgrade one, then you refinance out, or you get an appraisal on that, or when you go to sell one, you can upscale the value of your other 2? You're locked in on those 3 properties, but doing more on one can dramatically help you over time as well. Is that something you've thought about in terms of like locations for your investments?
Yeah, yeah. So for the hard money one, actually, we fully rehabbed it and put things in there that, truthfully, majority of the area doesn't have. I would say, like, nicer things,
Yeah.
and it showed in the appraisals. And we do know, like, the medical school, the hospital, they have bought so much land in that area, and they're rebuilding. So we do know long term that I think it'll work out.
Yeah, I mean, and you're every time you do, one rehab on one, you've potentially increased the top value of your other ones if they're all similar single family homes.
Mhm. Yeah, exactly.
So how was it, at least with those 3, and then we can get into like long term where you're at now, but how was it like being a landlord for the first time? I think some people think it's going to be easy, but it's not the easiest thing in the world.
Well, we hired property managers to manage them. And we had our first turnover with the first one. And I mean, when they told me how they left the place, it was a disaster, right? Like, they left a bowl of food in the microwave. It's like they didn't even
Yeah.
they were running.
Middle
I
of the
thought they were
night.
like running.
Yeah.
Yeah. The cat cage was still there. So I thought maybe the cat was still in the house, type thing. But so we hired property managers for the long term. And because I was heavily reading and started pivoting to short term rentals.
Yeah.
And at that point, I was like, I don't want to kind of, I know long term you're supposed to just sign technically you're supposed to just sign the contract and hopefully you don't hear from them for a while. But I just didn't want to deal with that
Yeah.
portion of it. So we did hire property managers to do that. Yeah.
Yeah. And how's property management overall been for you? It's not always the easiest thing to hire out, because some people think that hiring property management means it's completely passive, but they still have to run most decisions by you. So
Yeah, definitely. We actually have gone through a couple of management companies, so I'm not going to lie. It's
yeah.
probably been 3 already in 3 years. So it has been a little bit challenging, especially because you're trusting these people to actually, because we want to be like great landlords
Yeah.
as well. We don't want them to live in, if there's an issue, 100% we will fix it. We just need to know, type thing. And sometimes the property management won't tell you, or they think
Exactly.
it's something not a big deal, but it might be a big deal to the tenants. And like I said, we've been tenants because we haven't purchased our primary. So I know like how important it is to be there for your tenants if something happens, and even if it's not a true emergency. So
I've always said, I mean, a tenant can't treat your home like a home unless you treat it like a home. And that means upkeep
mhm.
as a landlord. If a landlord's kind of vacant or not paying attention to what's going on, how can you expect them? And sometimes, like you said, with property management in the middle, they're not giving the personal touch that you would want to get. And then you're trying to
Mhm.
figure out like, what's worth it? Do I have the time to do this, to try to make that relationship? But you also nobody wants to take all the calls. I mean, I did it growing up for my dad.
Yeah. Oh, you did?
Yeah, it's not the greatest thing to do.
Yeah, it's hard. It's hard trusting someone else to manage a property as well as manage the tenants and make sure that they choose the right tenants too.
Yeah.
So,
Yeah. The tenant
mhm.
acquisition, I think, is probably more important overall, because that one decision can play out over a
Yeah.
long time if they make the wrong decision. And sometimes they're just trying to put them in, so it's done. Hey, this is Jonathan. Thanks for listening to another episode of Zen and the Art of Real Estate Investing. On this brief interlude, I wanted to tell you that we have a mailing list. I actually don't love mailing lists. There's so much. This is not an automated mailing list where you get on a drip campaign. These are written once a month, will eventually be at once a week again by me, direct, and they're not spammy. So if you want to sign up for our mailing list, you can go to bit.ly/streamlined with a D mail. Bit.ly is bit.ly/streamlined mail. See you there. So you have the 3 in Kansas City, and then how do you start to expand from there into other markets and make that decision for short-term, mid-term, and other areas?
Yeah. So after that, we kind of exhausted all of our capital into those 3 properties because we did rehab the other 2. And those ones, the long-term ones, were just conventional, type things. So I read about partnerships. Honestly, things that I read, I really try to implement or do just so I can have experience and say, hey, I did it, but this didn't work, or I did it and it really worked. And so I tried to explore partnerships, and I found my husband found the property in Phoenix, Arizona, where I'm from. And we were really big because we lived in Chicago. We were really big on finding properties and where we were from.
Yeah.
So when we travel there,
Great
tax
idea.
deductions,
Yeah.
all that stuff. And we get to see our families. So my next place was in Arizona. He found it. I found a partner, and we were able to purchase that one. And I wanted to pivot to short-term rentals. So this one was focused to be a short-term rental.
Yeah. And owning short terms also gives you the opportunity to use it when you want, like you said. My sister and I were doing short-term rentals, 20 years ago. And a lot of the, before Airbnb existed, it was because we just wanted to have places we could go to, and we would always do them in shorter terms on Vrbo at the time or HomeAway. But that's an opportunity that's there. It's a great idea. If you have one close to family, you can block off the times when you're going to be there, or you can let other relatives go. And that's a benefit, of being close, and also recoup that in the money, because you should be able to 2 or 3x what you would for your normal monthly rent.
Yeah. Definitely.
Yeah.
Definitely.
Did it help though, also knowing that you're from there? Again, you're using these same strategies that I think are so important. You're not picking markets to start where you don't know anybody or anything about the market. So you're not starting from scratch.
Yeah, it really helped because I knew which areas not really to look at, or ones that have a lot of potential long term. So I knew which areas to look at, and it really, really helped.
Yeah. So,
sure.
And so where have you expanded markets wise over the 3 years?
So we're actually here in Arizona and in Kansas City right now.
Okay. All right. Great. So what are you planning now though? Like you've gotten your feet wet, you're getting the journeys going, and you show a lot of your journey on social, which I think is really helpful for other real estate investors to know. Like we were saying in the beginning, like you don't have to have dreamed about doing this your whole life, but you seem very focused on the right things for investing. What's the plans for moving forward now for you guys?
Yeah. So a long-term goal of mine was actually to own a dental office. But now that I know the real estate aspect of it, my goal is to own the real estate of the dental office and kind of scale from there. So I really do want to get into commercial in terms of like either retail space or dental studios and kind of scale from there. But I still love the residential aspect of it. I haven't done any commercial, but I love the residential aspect, and I would love to build a small but mighty portfolio.
Chad Carson just got happy somewhere with those terms. That's his small but mighty.
Yeah. That kind of portfolio that still make a lot of good return on the money, but I don't have to be like 100 units in if I don't want to.
Yeah. I mean, I think as a general dentist, like starting to figure out how you're going to buy your building to house your practice, but then that could also house other medical dental. That's a huge, huge thing. I've definitely helped people do that. And I look at it as like, it's the smartest thing though. Mixed use is so great when you have a business that can be in there, because you're helping yourself while you're getting the appreciation. So, what you're either paying yourself for rent or taking away is just helping you along the way. But like mixed use is great too. There are a lot of those, complexes that eventually now with the way the commercial is going, may be more likely to have residential on top. I helped somebody get an orthodontic practice. He bought the practice and the building in Union City, New Jersey. And then there were 2 units, and people who worked for the orthodontist lived upstairs too. So it was really a very cooperative type of building.
That's really cool.
Yeah. That's a great scale though. And are you thinking about diversification as you go as something that will help you kind of, to me, like diversification in real estate just means less boredom.
Yeah, yeah. And I guess with my track history, I really like exploring new things, even if it, I don't have much experience at all, if at all. So I would love to get into syndications, maybe commercial as well, but just little avenues in real estate. So at least I know the experience of it and I can say, hey, this was great. Like diversify as much as you can. And then, or if something doesn't work, I'm like, hey, okay, I'll pivot and do this instead, but at least I tried it.
Yeah. And in terms of like long distance investing, when you use the philosophy where you had a little bit of interest in the markets, you knew stuff about the markets because you were from there. Have you started to think about investing in markets where you don't have a tie? And if so, where might you go?
Well, I have. So I've actually attended real estate conferences and stuff and got to network with a lot of people and got to hear where they're looking or where they're investing. And it's so interesting, right? Like a lot of people are in the Smokies, a lot of people are, in other areas on the East
Yeah.
Coast that I was looking at. I would love to do that. And that's probably something next I would try to do. A lot of these places I've never been. So
Yeah.
I really have to trust myself in knowing the steps to take it since I'll be doing it long distance.
Yeah.
But it definitely is something on my radar.
Yeah. Side note for your Arizona investment, how did you find your partner? I think that's one thing as new investors, people are, I guess, have a little bit more trouble trying to figure out. Where did you locate that partner for that deal?
My first one was actually a family member, my aunt. They've owned properties in California, in Northern and Southern California. And I actually didn't know this. They're very silent they don't like tell the world what
Yeah.
they're investing in. And they were just like, oh, I just want to see the houses. So they would go to the house. Like I would call my mom, tell her to go look at the houses for
Yeah.
me. And she's like, oh, I'll go look, let me go look with her. And I was like, yeah, I'm looking for a partner. And someone told me, tell everyone you know what you're doing.
Yeah.
And so she was like, listen, like, I believe in you. I see what you're doing. Let me try and invest with you on this one. And so I found that one. And we're actually closing on another property tomorrow here. That's why I'm in
Awesome.
Phoenix right now, with another partner who actually we connected through social. So that's how we met. Yeah. Social media.
Yeah, your social journey has been an interesting one because you're very confident in what you do, but I think you're very open about knowing that you've only been in it for this long. How much has that helped you beyond this partnership? Because I think you've built a lot of relationships just through social, which I think works right now. But you still have to go back to what we said before. Everything on social is not going to be as it seems.
Yeah.
How have you maintained that openness on social to help other people and make connections?
It's crazy because I was so scared to start posting on social. I'm not going to lie. I have the worst imposter syndrome till this day. Like when I am about to post something, I'm like, oh my gosh, like, like people are going to think I'm a fraud or whatever. But again, I've learned from networking from a lot of people that, tell the people your journey. And it doesn't matter if it's something as simple, like as you don't have to put 20% down on the house.
Yeah.
People don't know that. Like some people just don't. And I realized that I've connected with so many random people that I've never thought would be so interested in what I'm posting.
Yeah.
So many messages, partnerships, and it's really opened a great avenue for networking for me and reaching out to people that I never thought I would connect with or, anything like that.
Yeah, I mean, similar. I had Lily Thompson on and she said the same thing. She really did the same thing 3 years in and then just posted the journey on social. But I think like by being like vulnerable and open about what your journey is like, you can help so many more newer investors steer clear of the other stuff that we talked about in the beginning, the big shiny lights that turn into a $50,000 funnel instead of somebody just saying like, hey, I'm going to Phoenix to close on, property number 4 or something. And this is how I got here. I think that's much more accessible and realistic than, what we're trying to avoid out there.
Yeah. I think just how I learned and got educated, just break it into really small pieces for people. And that's kind of what I'm trying to do with social is just either tell my journey and be genuine about what I'm going through, whether it's good or bad. I've posted a lot of things that, the crap that we had to go through the last 3 years, which there was a lot, right? Like nothing is easy in real estate, I would say, especially when you're beginning. And then I also want to help like bits and pieces of things that I learned and kind of tie that in there.
For the rehabs and stuff that you did in Kansas City, what was the worst thing that happened in one of them over the time frame? Like, what was the one thing where you're like, oh, well, I wasn't expecting that?
Oh, not expecting it?
Yeah.
Well, there's a lot of things that happened the last 3 years. There were accidents where people ran into our house, like the car, yeah. A huge tree fell on the roof and broke it when there was a family in there.
Oh my gosh.
Contractors running away with money, which was the
Very
biggest
common.
lesson I've learned.
Yeah.
Yeah.
Well, let's talk about that though. I think that's really important. Did you pay too much up front and then they just took off?
Mm-hmm.
Yeah.
Yeah. And what's really unfortunate is it was something that I couldn't control because I did everything to a T of what I should have done. And I really look back on it and I don't think I could have done anything different.
Yeah.
I got all the references, I spoke to every single person. I saw the work. I made a contract and he agreed to it. We came up, everything. I just don't know what I could have done differently. And that's what really, I guess, sucks about the situation is things just happen, I can't control everything. But the thing I could have controlled, I guess, was not give him that amount up front, which was a big learning lesson. Yeah. But everything up to it is, I wouldn't change.
I think a lot of people think that there's going to be a time when you're like 100% comfortable with your contractor and team, and you should never be.
Mm-hmm.
I mean, I can just tell you from my experience that it doesn't matter at some point that group or whatever, your electrician, something's going to go wrong. Like we usually just have a cycle. I always have at least 2 backups for every position just because it just doesn't work. And we don't use subcontractors. Yeah. We use all our own subs. So we don't let the contractor use the subs. So we have full control of the jobs. But like you said, outside though of the area, that's way, way too much management. If you're long distance managing a renovation, you really have to rely on a contractor, but relying just on a contractor and all their subs creates extra money on that pay, but more risk. Like you said, you're paying more upfront because you're paying for all the subs inside of it. Yeah, that's an important one to bring up. How did you solve that? Did you just say like, okay, well, that's a wash, we're going to go find a new contractor?
It was, yeah. We tried, honestly, like I was so hell bent over it, honestly, because I was really sad, truthfully, because it was like a huge mistake on my end, or at least I thought it was at the time. And we tried to do legal things to kind of remedy it. And it was a waste of time, honestly.
Yeah.
It was just such a learning lesson.
Yeah.
It was just a wash at the end. So
that's usually how it is. I remember when I was living in Sarasota at the time, I did a flip with a partner. They were the work, I was the money. And they just like were putting stuff on credit cards that were supposed to be for the business. And so I went to see a lawyer, probably same as you did. I was like, I want to sue these people. And I was a prosecutor at the time. So I'm like, really like, I want to do this. Like, I want to actually be the prosecutor on this. And my friend, attorney in the area, is just like, listen, you're going to spend $15,000 to try to get $15,000. Like it's not, there's no point. So, and I think that will come up a lot. Like if you lose $7,000 or something, you can't sue to get it back. You just have to kind of take it on the chin and move on, because you'll spend way too much time in that cycle of that instead of just accepting for whatever reason, either I made a bad choice or I got unlucky. Like you said, you did everything that you could. Somebody's just a bad person. If you don't move on, the job's never going to get done. And you have to, have a window on the renovation to get it done. Did that not scare you off though for the next one? Because you kind of knew like, well, my processes are good. That was just an unlucky one.
Yeah, I actually spoke to, like I said, I got references and I know the other people that he has done work for, and they're actually really big investors in Kansas City, and they've used him for multiple jobs. And we've had a lot of collaborative conversations and they were just very encouraging and said, sometimes this happens and you just got to kind of eat it right now, but go on to the next one because you're learning. So just by them talking to me, and they were all different investors that I knew of them type thing. And they know each other, but they're everyone knows, investors and investors in the same area kind of know each other.
Yeah, for sure.
Thing. But yeah.
All right. So I want to talk to you a little bit about what you said, most important trait for a real estate investor to have: tenacity. It's clear to me that you have it, but why is it so important, do you think, for other new investors to know that going, in up front? Like you're going to need to take a couple punches to the face to be able to get through that and stay locked in. What would you tell new investors how to focus on that, get prepped for that before you start the journey?
Someone actually told me that if something doesn't go wrong in at least the first year or two that you invest, you're like a miracle child or something, you're gonna experience this. And I think just pushing through whatever you're going through is gonna get you to that next level of investing.
Yeah.
So that's why I think it's really important for people to push through, whether how big or how small it is. At least do your homework, get educated, know what to do. And if things happen, you just push through.
Yeah, you said something earlier that I think is important. When you were talking about doing research and podcasts, you were searching for something specific. We were talking about hard money at the time, but I think that's a really good point because, when you have a show like Bigger Pockets, there's whatever, 700, 800 episodes. If you're a new investor and you're just like, hey, I'm going to start at number one and listen to them all, you're going to be in analysis paralysis forever. Like you have to just go in, use the search function and look for something they want. Even on this podcast, there's so many different types of guests. You want to use the search function, look through who is, where's the episode that talks exactly about what I want to know. And I think you said that related to hard money or to private lending or something like that. That's such a cool thing about podcasts that you can scroll through this database and just find one episode and like, wow, that's exactly what I wanted to know. And you can usually tell from the title or from the guest by looking through. Did that kind of help you hyper focus on, okay, now I'm at the next stage. Now I want to figure out contracting. Let me find one episode that can help me with this.
Yeah, it definitely helps a lot because sometimes I feel like I can have the shiny object syndrome.
Yeah.
And the more that I kind of think of all the different avenues, which there are so many avenues you can take in real estate, if I learn just a little bit of each one, I will never actually learn a lot about one where I can focus that specifically and scale that way and then try something different and kind of, build it upon each other type thing.
Yeah.
So,
I mean, are you, well, I guess since you keep moving around, you can't really focus locally. Is it more comfortable for you now to focus on areas that, like we were talking about, where you have experience because you don't know when you're going to stop moving? Maybe not yet.
Yeah,
not yet.
It's funny because we live in Fort Lauderdale right now, and we've been looking in Fort Lauderdale because we just love the vacation area.
Yeah,
It's such a vacation friendly area that I guess my experience has only been in areas that I am comfortable with, as in like I have experience there type thing, or my husband has experience there.
Yeah.
I haven't dived into the other avenue yet, but I'm definitely on my radar and I'm looking, but I need to do a little bit more research in certain areas. Like, I need to make sure I have my ducks in a row.
Yeah. Fort Lauderdale is still an interesting market. I mean, I lived there for 7 years, a long time ago. And I remember I bought in Rio Vista, which is right behind Las Olas. And then I went on Google Maps like 10 years later and they knocked down, which was the coolest house that had a pool in the front yard. It was like a New Orleans type, super cool, small 2-bedroom house. And they knocked it down and put like a mini Gross McMansion. And I'm just horrified. So maybe you can help save some of the other homes in the area and not do that.
Yeah.
Well,
it is a very interesting market.
Yeah. So do you think your next target might be, obviously you're closing on one today. What's the plan with that? Is it already turnkey, ready to rent, or you have to do some rehab on it?
It's a full renovation, actually. So this one will be a full renovation. And we have a lot of work to do. So that'll be my focus in the next couple, maybe a month or two.
Yeah. Well, nice that you do have family in the area and family as partner in that. So you really have like dedicated eyes on the property. That will certainly make you feel a little bit more comfortable, I'm sure.
Yeah, this one is partnered with someone who found me on social media.
Right. Absolutely.
Yeah, so that's why I'm making sure I'm just going to focus on this one, the next couple months. We actually are closing on another property in September here as well in the Phoenix area. So I'm going to focus on the rehab portion of this because it is a pretty extensive rehab, and then continue on after that.
Yeah, excellent. Well, where is the best place for people to get in touch with you? It's probably Instagram. Am I right?
Yeah, definitely. Yeah. If anyone wants to follow me, I'm at _Alexandra Burnham, and I'd be happy to connect. If anyone has questions, I answer everything. I mean, I've had so many messages and I've answered everyone, and I've actually emailed things that I've used to people, and people I've never even met before. So yeah, I'm happy to help any way I can.
Don't miss the underscore before Alexandra Burnham.
Yes.
But yeah, you'll be able to. But I talk about this a lot because we talk about social media a lot. I really think that DMs is important. Of course, there's a lot of trash that comes in the DM, especially much more for females than for men, just for obvious reasons. There's just weirdos out there in the DMs. But when it comes to investing, like, I really feel like answering the DMs is so important for everybody. There's people who will reach out. Sometimes you find them in like the trash part of the DMs. And you're like, oh, they're actually just looking for help. And like you said, you learn so much from investors who are willing to give you the time. Now you're able to create a platform where you can go in and answer the questions that people really need to hear, because sometimes just the answer of a DM from somebody who's a little bit ahead is the thing that will get them out of that analysis paralysis. They just need somebody to like answer this one question or just say like, you can do it. Have you found that you've had some of those conversations just through DM where, 10 years ago, we wouldn't be talking about this?
Yeah. Actually, just the other day, I had someone reach out and they were just like, I've been watching your social and we actually are closing on a property next week. Long distance, you have experience in this. Can you please help us? Is there any advice that you would give us? And we're looking for contractors. And because of my contractor, experience, the poor experience I've had with that one, I, told them kind of list of things to do. And they were like, we never thought of that. Like as simple as, you buy the materials, get a Home Depot Pro account and they can go buy the materials. Yeah. You pay for it, so they don't upcharge you. Just as simple as that, and they were like, I didn't even know you could do that.
That's a huge thing. Yeah.
Yeah. Because I hate, I would love to see just the materials and just the labor, that type of thing. So,
well, you don't want them running off with the extra stuff too. Like, why'd you buy so much sheetrock like that? You don't need that much sheetrock, and then it's going to another job. That's a great point. Yeah. But that's like I think that's a great way of finishing this up because of where we started. If you look at the overall spectrum of real estate investing, there are so many people who are willing to help. And then after you get the help, you can be the person that helps. But really, like, those questions answered can change the complete investing trajectory for one person because, they may be going to the wrong people like you did. You go there and, oh, this is a pitch event. I shouldn't have gone to this one. But then you instead of getting scared, you go to the next one. You're like, oh, this isn't a pitch event. This is the real thing. But yeah, you do have to look around a lot. Well, it's been an absolute pleasure. I'm so glad to have you on the show, and I look forward to staying connected and find out where eventually you decide to live for more than a couple of years.
Yeah, thank you so much for having me. It was so great. Such a pleasure.
My pleasure. This was episode 61 of Zen and the Art of Real Estate Investing with my guest, Alex Burnham. I'm Jonathan Green. We'll see you next week. I hope you enjoyed that episode of Zen and the Art of Real Estate Investing with me, Jonathan Green. And I just want to remind you, and this is always an uncomfortable part, I don't want you to think that I'm begging for you to like, subscribe, follow, do whatever you have to do for the podcast, leave a 5-star review. But if you like the podcast and you think it adds value in the real estate investing sphere, then just do me a personal favor. Like the podcast, follow it, share it when you can with your friends, and be so kind as to write a 5-star review if you believe it deserves a 5-star review up against what else is out there. I would really appreciate it, and I hope you keep listening.